This is a video chart presentation of Formation Metals Inc. Formation Metal trades on the Toronto Stock Exchange under ticker FCO. A real nice move here in 2014 from down around 7 cents all the way up to over top of 25. Stock consolidated, went back on the rise, and now for the last week or so is just trending sideways, fighting a resistance point at 25 cents and finding some support right around 23 cents. Essentially, this chart's formed a cup and handle continuation pattern, and we want to keep an eye on it to break through the first resistance and certainly try and take out this top at 26 cents, which technically should signal a real nice move to come following the break of that resistance. Now the MACD is still trending downward, which is not the greatest sign in the world. It shows the trend is losing some strength, but overall still holding over top of zero, still part of a much longer term trend that's moving upward. And right now, as long as that MACD can hold in positive territory, still okay with this chart staying in play with the formation of this pattern. Slow Stow's been holding over top of 50 ever since the bottoms at the beginning part of the year, even going back into December. That's a sign of a bullish momentum. And again, as long as it holds the upper half of that indicator, the chart's sitting just fine. Same way with the money flow index, up around 80. People are still paying higher prices for the stock relative to average prices. Again, that's bullish. You can see similarly the relative strength index has been in a bullish position now for many months. As long as all that holds, even if the stock decides to pull back some, that's okay. A cup and handle pattern doesn't have to form the handle just trending sideways. In fact, generally speaking, it does pull back some. And on that point, if it does, I'd look for some initial support right down to this area of the 20-day moving average, right around 21 cents. And I don't even think it would be that big of a deal if it dipped to 20. I'd be much more concerned if it fell back and dropped all the way down to this 50-day. Essentially then the cup and handle pattern is defunct, and then it just becomes a support and resistance play. But the chart in general will be taking on a much more bearish look if it slipped all the way back down to around this 17-cent area. Right now, though, the chart caught our eye because of the cup and handle, and as I said, I'd look for this initial resistance right there at 25 cents, with that running right up to 26 cents at the highs that were set in March. I'd encourage people to do their due diligence on price targets for cup and handle patterns and to learn better how they work. We'll certainly be looking for an increase in volume on a breakout, much more than this 105,000 shares that was traded on Thursday, because you can see volume has dried up during this consolidation, which is exactly what you want to see in a cup and handle. But to break through the resistance point, you definitely want to see a surge in volume. We have a tutorial on this at allpennystocks.com Pro that better explains price targets, because typically we're not going to go into that in these videos. But for this particular chart, there is a substantial upside if resistance can be broken on an increase in volume. So those are the things that we'll be looking for in the FCO chart. But as always, it's merely my interpretation. I'm not a financial consultant. Strongly encourage you to do your own proper due diligence. Consult a qualified investment advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the allpennystocks.com website to view the full disclaimer disclosure, and do not base any investment decisions upon any material found on the website and/or its video chart. No person employed by All Penny Stocks is a registered investment advisor or licensed broker-dealer. Thank you for watching. Trade smart.